Hi, everyone. I'm Josh Radbod, co-founder and CEO of the PBC conference, the B2B conference for payments, banking, and compliance in the cannabis industry. I'm here today with Rodney Hood, board member of the National Credit Union Administration. Rodney, it is so good to see you again. Thank you so much for being a keynote speaker at our PBC 2021 conference. As we were planning this webinar together, you had stressed how important it was to have open communication between government regulatory bodies and the private sector. So we really appreciate you taking the time to be here with us today. I'll turn it over to you to share more about you and the NCUA, as well as some remarks on financial institutions working with the cannabis industry from the perspective of the NCUA. We'll then dig into some curated questions we have received from financial institutions in the cannabis industry. Thank you so much.
Great. Well, Josh, first and foremost, thank you for the great invitation to join you all today. I am Rodney Hood. I have been both the 11th chairman of the National Credit Union Administration Board and now currently serve as a board member. Many of you may not have experienced NCUA before, so I'd like to give you a brief overview. NCUA is the federal regulator and insurer for America's credit union system. Today, we oversee 5,000 institutions that serve 127.2 million member owners. That roughly means that a third of American households are members of credit unions. Today's assets approximate $2 trillion. What I'm most impressed with our credit unions is their ability to now have loan outstandings of over $1.3 trillion. That means that credit unions throughout our globe are providing the loans that individuals need to buy homes for sustainable home ownership. They're able to get the cars they need to drive to and from work. And more importantly, they're able to get those entrepreneurship loans so that they can create and sustain viable businesses. As a regulator, I believe that a lot of my responsibility is to provide opportunities for credit unions to fully serve their members with a fidelity towards safety and soundness. Lamentably, in the United States today, we find communities at large that 40% of communities cannot obtain $400 for a family emergency. We have 45 million individuals who are characterized as credit invisible. That means that they are unable to have access to affordable financial services. As someone who's worked in and around banking and economic development for most of my career, I look at financial inclusion as the civil rights issue of my generation. And when I talk about inclusion, I'm talking about those ethnic communities, those immigrant communities, low to moderate income, disabled, differently abled, rural, and indigenous or tribal communities. But as I work with the cannabis industry, I recognize now today firmly, I need to add the cannabis and the marijuana related businesses to that list of underserved communities. They too need financial inclusion. We have so often seen that many of our MRBs that they operate in states where the cannabis industry is legal, but yet they face obstacles when it comes to financing, for getting a lot of the opportunities they need to provide folks with mainstream economic tools. So that's why I'm, Josh, so pleased to be here today as a regulator who wants to do more and should do more to really provide an off-ramp for the legitimate use of cannabis-based businesses operating in our today's economy.
Rodney, thank you so much for that information. Let's now jump into some specific questions from the cannabis industry. First question, what challenges and opportunities do you see for credit unions right now regarding cannabis and non-cannabis related issues?
Well, I think the main issue regarding credit unions, I just mentioned that we have about 5,000 that are actively engaged in serving a third of American households. I think that of that 5,000, we have 178 credit unions who are able to serve this particular market segment. I think the challenge has been a disconnect between state laws and then the fact that it's not legal at the federal level. So we've had a lot of uncertainty. I think many folks are skittish about being a part of an economic system that they don't know what's going to happen regarding regulation. That's why I, for sure, have been making a wonderful attempt, I think, to let them know that it is all right to engage in this business. We do not want large sums of cash staying in cannabis-based businesses when we need to get those funds put into the mainstream economy. So I tell our credit unions, Josh, that it's so important that we follow FinCEN, that we follow the tenets of good Bank Secrecy Act precautions, filling out their suspicious activity reports, their currency transaction reports, and to do all that it takes. Because if we don't take these necessary steps, we are going to have cash in the hands of individuals who really don't have safety. I heard today, just met with a cannabis export here doing a business trip to Arizona, where I was told that people are putting the cash in the trunks of their cars until they can get it to a storage facility or to a bank. I want to find opportunities again to provide a safe off ramp for businesses to engage with the cannabis business and then put their dollars in a safely insured credit union, which, by the way, credit unions insure their deposits up to $250,000 per account. So again, I think there is this mismatch of opportunities there for folks having a little skittishness. Then I also think that many folks are still learning about the business. I know for me, as I continue my learning trajectory, I need to recognize that there is a vast ecosystem of folks that are involved both in the cultivation side of the cannabis businesses, also in the development, in the creating of the dispensaries, in the location, and just really, it's like any burgeoning business. We're going to need to research. We're going to need to be mindful of all this nuance, but that doesn't mean that we need to stay clear of it. It means that we need to embrace the challenges of this burgeoning industry head on. When I hear that it's today roughly a $20 billion industry, that tells me that there is a lot of potential for growth and development, and especially as we in America look for ways of recovering from the pandemic and also for broadening and boosting tax revenues, the legitimacy of cannabis-based businesses, I think, is the way to go. But you also asked, Josh, about what are some of the other issues and challenges that we're seeing in the credit union system today. And of course, it extends beyond their skittishness when it comes to embracing MRBs or marijuana-related businesses. Other things that I care about would be akin to if you were to talk to any of my other peers from the FDIC or Treasury or the OCC, and these are cybersecurity remains an issue that keeps us all up at night. We have to be twice as strong and effective as the bad actors out there to ensure that we're keeping our financial institutions safe and sound. It means that we are protecting our passwords. It means that we're using our cloud environment. It means that we're doing the multi-factor authentication, all the things that are going to be critically important to keep our institutions safe as well as our regulatory body. Another piece of information that I think is a challenge, and that is data privacy and data protection. We also need to recognize that the bad actors are out there. We need to protect the data. That means that every day I'm tasked with protecting the personal identifiable information of nearly a third of American households. So we're making sure that we're making the appropriate investments, testing them, doing emergency reviews. We're doing a lot of testing and trial analysis. We work with our peer agencies from the Department of Justice and Treasury and things of that nature. And then another area that I think is something that's equally concerning to us in financial regulation is, what does the recovery look like? What do we do to manage the balance sheets of these $2+ trillion in assets the credit unions have collectively? Are we managing the interest rate risk? Are we looking at the duration risk that may exist from balance sheets, that mismatch of long-term and short-term assets? So again, as with any regulator, especially those that are looking at banks and credit unions, those are some of the issues that we face. But you know what? Those are not insurmountable issues, Josh. We dealt a lot with that with the Great Recession from well over a decade ago, when we saw the colossal, failure and collapse of a lot of our mortgage markets. But the one thing that I tell folks, and the one thing that gives me great solace, is that today's financial system, both credit unions and banks, we're far better capitalized than we were a decade ago, far more liquidity. And I think that we really now have a lot of the tools in our arsenal that can really allow us to navigate and keep the American economy safe and sound for the days ahead.
I could not agree more. Thank you so much for that excellent answer, Rodney. To our second question, more credit unions are willing to work with the cannabis industry. What advice do you have for financial institutions that are looking to enter this industry now?
I think the main advice I would give to them is to make sure that they understand the business. I know that we recognize that it is a $20 billion growth industry, and that's just with the latest data that I have from about 2019. I think the main thing that I tell folks is make sure you're doing your due diligence. Make sure that you understand that you just don't tip your toe in the water or dip your toe in the water, but you need to make sure that you're going to have the expertise around commercial underwriters, the folks who are able to look at analysis of the cannabis businesses, because you're needing to look at where is the money flowing, where does it go, who are the principals, who are those business entities that are engaged. Because of this vast ecosystem, entering this business is not at all for the faint of heart. If you're going to do it, I encourage folks to make sure that you're making the necessary investments, the necessary opportunities around technology, reporting. We've talked about the Bank Secrecy Act. We've talked about currency transaction reports. But the most important thing is getting to know the industry, getting to know the state and specific laws, since a lot of these issues are now legal in 38 states, and we hope that the others will follow suit in due course. But the main thing is due diligence, relationship management, and making the necessary investments up front to ensure success. And Josh, I would add, one of the things that makes credit unions unique is because they are not-for-profit cooperatives, they engage in a lot of collaboration through a group that we call CUSOs. CUSOs are credit union service organizations. That means that you could have a number of credit unions that are investing in a CUSO to help them with their back office support, to help them with mortgage underwriting, small business underwriting. So I would think it's safe to say that through the collaborative nature of credit unions who really want to pursue this, I'm going to encourage them to work with creating CUSOs, credit union service organizations, that can give the smaller institutions the scale they need to really embrace this burgeoning business segment. But again, it's not one that should be feared. I think as with any growth industry, we need to make sure that we understand it, don't run away, but mitigate whatever risks you examine. And I, as a regulator, my philosophy is that regulation needs to be effective and not excessive. And saying that, it means that I want to give my regulated institutions the level playing field that they need, giving them the guidance that they need, but so as not to micromanage and to prescribe something to what may work in one area of the country that simply may not work for the other. So it's about then having a risk-tailored approach to looking at this business, a tailored approach that's commensurate with the asset size and complexity of the credit union who wishes to engage in this business segment.
Thank you so much for that guidance, Rodney. I'm certain the folks listening are going to appreciate that. We'll move on to our next question here. So you kind of touched on this a little bit. What types of compliance controls, internal or through third parties, do you recommend credit unions use in order to properly work with the cannabis industry?
Well, again, I think it's going to be encouraging those credit unions to look at each business segment, to understand those principles. And of course, monitoring the money is as simple as that's the main thing. That is the major part of the due diligence in this business, where we're wanting to make sure that we don't have bad actors infiltrating this business. Again, I think that there's always been this, perhaps what I would call a prohibition mindset when it comes to dealing with the cannabis businesses. So I want to make sure that we are doing the due diligence, and that is looking at all of the entities and the principles that are engaged. And as I don't need to tell you, in a strictly regulated industry like cannabis, numerous reports and state controls can allow an institution to reconcile the flow of funds and verify the information, again, about the businesses and the principles. So again, it boils down to relationship management. Also, making sure that you're looking at the state licensing, making sure that they are adhering to that, making sure that if they're telling you, for instance, that the crop is generating $1 million in income, but then you look at the due diligence reports and it's 10 million. So making sure that those accounting statements and the tax returns are all measuring up. And as mentioned earlier, it's just paramount that the institution size up each relationship based on the unique characteristics of that customer and the parlance of credit unions of that member owner. But again, it's about the due diligence in the member piece. And sorry if it sounds like a broken record, but that is the one piece that I predict that can make or break an institution when it comes to working with third parties and looking at your compliance controls. Now, I do have solace that technology is going to help play a part in this, whether it be fintech tools or some other automation that can take place. And again, credit unions, because they are a little bit more agile and nimble, because many of their sizes are different. I have credit unions that range from 3 million in assets up to 140 billion. So that QSO model, and some of them, they can get to know those principles, I would say, a little bit more readily than other larger financial services providers just because of that credit union model. They tend to really be very closely tethered and aligned with their customers, and that's our members. And that's whether it's for a commercial loan or a residential loan or whatever the case may be. I think that the opportunity is now, and especially with things such as Safe Banking Act, I'm hoping that we will see that cross the finish line soon. As I tell folks, it's not a matter of when, if we see this legalized, it's a matter of when. And I think we're getting closer to that when. And again, as regulators, as we work at the NCUA, we don't want to just wait for it to pass and then ask ourselves, what do we do now? Let's build infrastructure. Let's get the T's and ducks in a row so that we can really be ready from day one. I just gave a speech on the same subject about 3 months ago in San Francisco, or actually outside of San Francisco, but that was my same admonishment. If you think you're going to pursue this business, let's begin now. When you see some of the investments that are being made, now is the time to really prepare, I think, for what's going to be a bright future for this, again, this burgeoning market segment.
Thank you so much for that, Rodney. And you touched on technology, right? So speaking of that, do you see digital payments as an area that companies in the cannabis industry should focus on?
Of course, I think as we talk about the large hoards of cash that have been shipped from the dispensary to wherever the bank or credit union is, to the fact that I really want to mitigate some of those risks. I've heard the stories of Colorado where someone's home was burglarized with them in it, by the way, because they know that these individuals worked in a cannabis dispensary. So yes, digital payments, as you know, it all covers a wide range of services from ATM swiping to decentralized wallet to actually virtual currency and virtual transfer. And I need to tell you that some widely accepted, but some of them are, and others are emerging as new and powerful tools that at the end of the day that are going to unlock choice and reduce costs. And I hope to expedite the payment of some of these transactions. But as with most things, Josh, I don't need to tell you as a seasoned lawyer in this space, each of these tools in virtual currency and virtual wallets, they do carry risk and benefits. The use of value of virtual currency can provide great benefits, provided though that the cannabis business has a means of converting the virtual currency when needed into cash. And I think that's the one main thing that we need to think about when we embrace any of these new emerging platforms. But in addition to the stance I've taken with cannabis, I'm also launching an Office of Innovation and Access at the NCUA. We want to have a fintech officer who's going to be able to work around payment systems, who's going to be able to work around helping our institutions have access to best-in-class products to better serve that third of American households who are relying on their credit unions. So I think it's important to know that fintech will play a role in whatever payment system that you all decide to use with your entities. We just want to say we're not going to be prescriptive or heavy-handed, but just make sure following the money, and also are able to use those platforms when needed to convert them into cash.
Thank you so much for that, Rodney. Well, you answered my fish question there, so we'll go on to the last one, and it's an important one. So what is the one important piece of information you would like credit unions to know, and one important piece of information you would like cannabis companies to know?
I actually think that the message I would have for both is similar, and that is we as an industry must embrace the cannabis-related businesses. We as an industry need to be prepared and postured to make sure that gone is the day that cannabis-related business owners are a part of the prohibition era. And what I mean by that, the fact that we have mainline banks and credit unions who perhaps have been frightened, timid, or skittish about bringing some of these legitimate businesses that are legal in some states, 38 to be exact. We need to now recognize that we have the safeguards in place. We can follow the FinCEN guidelines. While the Cole memo has been rescinded, we still adhere to that because that still has been the guiding principle by which we've been able to make sure that folks are following the tenets of good, strong Bank Secrecy Act and knowing your customer and all the things that is important to keep our homeland safe. So Josh, my information is we want to work with you. We want to equip you for success. I think a harbinger is the fact that the Safe Banking Act is getting more traction. I think the fact that it is now included in the National Defense Authorization Act, I think that does perhaps bring it closer to the precipice of going over the finish line, because this is folks are now articulating in DC, it is a national security issue if we have these businesses that are not being able to really deploy effectively their cash. If it's an industry, if we have this growing market that's not being fully serviced. So cannabis businesses, I hope that if you're not working with one of our 178 credit unions that are already engaged in this business, I hope that you will be able to partner with some of them. For those who are still thinking about it, I want you to know that we at NCUA certainly are doing our level best to provide the guidance that we need. We have an internal working group that's working on the cannabis related businesses. How do we really look at extracting some of the pain points and impediments from credit unions engaging in the business? I think another piece is to note that we were one of the leading agencies when it came to providing hemp guidance. That was one of the first things I did when I was named the 11th chairman of the NCUA. We had a letter from a member of Congress wanting us to know what can be done to help these legal hemp businesses take part in the businesses of serving the customer segment. So we were able to provide readily available guidance on that because, Josh, as you know, the hemp business was legal at the federal level, and as a federal regulator, I could respond to that. Now, of course, it does take a little more nuance around the state businesses with hemp and cannabis. But the thing at the end of the day is we have found ways of adhering to bank secrecy, to FinCEN. I think, again, I want all of the folks to know who are listening to the base podcast, we want to be that lender of choice. Credit unions were entrepreneurial from their inception nearly 100 years ago. You have found them always looking for ways to serve their member owners. And I think especially when I look at underserved communities, underserved, yes, these cannabis businesses, while we think of them being in urban areas, I think there's opportunities for them to be in rural areas. And all the more reason why we want to make sure that they're getting the loans that they need to create viable, sustainable businesses. I think as I look optimistically about navigating through the pandemic and getting ready to the recovery, I'm thinking that if we get the Safe Banking Act to cross the finish line, credit unions and are able to build infrastructure, I think we're going to see just as much success in this industry as we have with some of the other industries of a bygone era. So Josh, I just want to say thank you for the opportunity to talk about my willingness to help consumers and help credit unions, all who want to be a part of this economy.
Rodney, thank you so much for this insightful and positive conversation. And thank you to your staff for partnering with us on this webinar and providing this critical information to the industry. For more on payments, banking, and compliance in the cannabis industry, and to network with leading executives and regulators in the space, please join us next year at our PBC conference in Washington, D.C. on September 7th and 8th at the Capitol Hilton Hotel. Thank you so much.